Okay, we are recording. Hi there, everyone. I am doing this recorded lecture to go over Chapter 7 PowerPoints, and then depending on how much time we have, maybe a couple of the exercises out of Chapter 7. I'm actually going to start my timer so I know how much time, but okay. So we're going to cover the Chapter 7 PowerPoints and see, hopefully we'll have some time to get a couple of these calculations done. They're not too bad. And of course, we're going to get practice with them together in class. So I am going to share my screen with you and we will go over the PowerPoints first. And so in Chapter 7, we're talking about payroll and looking at the employee side. So the payroll, calculating payroll for an employee, and calculating, what taxes come out of the employee's paycheck, what deductions, taxes and deductions, calculating gross pay and net pay, and looking at those transactions. So in Chapter 8, we look at employer side of it. So Chapter 7, we look at the employee side of payroll. And then Chapter 8, we look at employer side of payroll. So that's what we're doing here in Chapter 7. And so some of the learning objectives: recognize the role of income tax laws that affect payroll deductions and contributions, calculate total earnings based on an hourly salary, piece rate, or commission basis. Again, we're going to get practice with that. Determine deductions from gross pay, such as federal income tax withheld, Social Security tax, and Medicare tax to calculate net pay. Complete a payroll register, journalize the payroll entry from a payroll register, maintain employees' individual earning records. Again, we're going to get practice with all of this together in class. So, basically when we're thinking about the employee payroll record, a lot of times employees will, either clock in. I know, back in the olden days, you used to have to take a card and kind of put it under this stamp machine. It stamped the time, but nowadays, people can clock in on their phone in different ways or whatever. But, kind of starts by calculating total hours worked and what our gross wages would be, right? And then we take away any taxes or any other deductions to calculate net pay. But as far as the information kept per employee, just like it shows here, employers are required to keep records on all their employees' personal data, data on the wage payments, in other words, how we calculated gross pay, deductions, net pay, amount of taxable wages paid, amount of tax withheld from each employee's earnings by pay period. So these are kind of the numbers that we're calculating as we fill in this payroll register, right? And so companies overall have a payroll register for every employee within the organization, right? And kind of a overall control account or overall ledger. And then each employee has its own individual record, right? And so all of the employee records come together to form the entire payroll register. So we're going to see examples as we go through the PowerPoints. Again, we're going to get practice together in class with it, of course. So some of the key terms that we're going to be talking about: gross pay, net pay, employee versus independent contractor. So again, gross pay is the total amount that we've earned before deductions, right? So gross pay is what we earn. So just to use a simple example, if we make $10 an hour and we work 40 hours a week, our gross pay, $10 an hour times 40 hours a week, our gross pay is $400, right? So, that's just a simple example. Net pay is what we take home after taxes and deductions. So, again, if we say, for example, gross, okay, if we make $10 an hour times 40 hours, right? Then our gross pay would be $400. Okay. I know my writing's not very good on this thing, but then let's say that our taxes and deductions are $50. So then we'd take our 400 minus 50 deduction, and then we'd have net pay or take home pay of 350. Right? I mean, those are just simple examples, but that's what we're going to get practice calculating together. So employee versus independent contractor. Employee is someone who, works for an organization and is, under, just like it shows here, under the, their schedule and such is under the control or direction of the employer. The employer pays them, X amount. The employer withholds taxes. The employer pays unemployment on the employee, so on and so forth. An independent contractor is someone who is hired to do a particular job, but doesn't necessarily work for the organization. So independent contractor is essentially self-employed. An independent contractor works for his or herself. And so just like it shows here, an independent contractor, when they pay taxes based on this, what's been claimed on them, 1099 form. So, if the independent contractor, charged $5,000 for a job, they would get this 1099, miscellaneous income form from whoever paid them, and they would pay taxes based on that. So, okay, some of those laws that are talked about in this chapter, the Fair Labor Standards Act of 1938, the Current Tax Payment Act, 1943. So Fair Labor Standards Act, or FLSA, provides minimum standards for both wages and overtime, includes provisions for child labor and equal pay for equal work, exempts specified employees or groups from some of its provisions. Current Tax Payment Act requires employers to keep records of the names and addresses of persons employed, their earnings, withholdings, and the amounts and dates of their payment. And then when a company, and we're going to talk about this more as we learn about these calculations, but when a company takes taxes out of your check, they don't get to keep those. They have to pay those to the, respective government agencies. So for example, when they withhold federal income tax, they have to pay that to the U.S. Treasury. When they withhold state income tax or state sales tax, or not sales tax, but state unemployment, things like that, then they have to pay that to the state, in our case, Missouri Department of Revenue. So companies withhold taxes from the employees' paychecks, and then they have to turn around and pay those taxes to the specific government agencies. Okay, FICA taxes. So FICA, just like it shows here, Social Security and Medicare. The Social Security Act of 1935 began as an attempt to provide retired workers with benefits based on their work history. So the more you make throughout your working life, the more that you earn in Social Security when you retire, is the idea behind it. Social Security taxes are 6.2% of the employee's wages up to $118,500. And so now, and these numbers are based on when the book was published in 2016. So now the numbers are a little bit higher. I want to say right now it's like 137,500. But anyway, we're going to use the numbers that your textbook is based on. But Social Security taxes, you pay 6.2% up to a certain amount of earnings, right? And then Medicare taxes, 1.45%, are on all earnings. No earnings limit, just like it shows here, no earnings limit for Medicare. And so, but both of these together, Social Security taxes, Medicare taxes, both of these together make up our FICA taxes, right? So FICA are both of these things, right? Medicare and Social Security are FICA. So when we talk about FICA taxes, there's two FICA taxes: FICA Social Security, FICA Medicare, right? Okay, so this goes into that a little bit more. Again, FICA taxes, employers have to match the amount of FICA taxes withheld from the employee's wages. So, again, going back real quick here, Social Security, 6.2%, Medicare, 1.45%. So actually, when you are an employee, you pay 6.2%. And then your employer matches, right? Employer matches. So actually 12.4% is getting paid in for you, right? Same thing here, which I'm not very good at writing with this thing. Employer matches. So then 2.9% gets paid in for you actually, right? Okay, so that's what they're saying here. Employers have to match, right, the amount of FICA taxes withheld from employees' wages. And then also employers pay unemployment taxes. So employees do not have to pay unemployment taxes. Employers pay unemployment taxes, right? And then, your book also discusses workers' compensation laws, and, workers' compensation is just there to protect employees and their dependents if they're hurt on the job. So anyway, we're going to get practice calculating all these. I think the numbers that we're going to use in our textbook for state are 5.4%, and then for federal 0.6%. I'm pretty sure that's the numbers that we use in your textbook, but anyway. Okay, so just to kind of summarize what the employee pays versus what the employer pays. And like I said, in chapter 7, we're focusing on the employee calculations and focusing on payroll from the employee side. For chapter 8, we're focusing on employers. So employee, again, this is chapter 7. Employer, this is chapter 8. But both about payroll and the different transactions that go along with payroll. So employee pays federal income tax withholding, and then FICA taxes. So that's the Social Security and the Medicare. And then the employer does not pay federal income tax on the employee's wages, right? So just the employee pays federal income tax. Employer does not. But again, the employer does match the FICA taxes. So 6.2 employee, 6.2 employer. So again, 12.4% is getting paid into Social Security on your behalf. And then Medicare, 1.45%, employer 1.45, so 2.9% being paid in to Medicare. And then also the employer pays federal and state unemployment taxes. So this is FUTA, F-U-T-A, FUTA, and SUTA, right? Federal unemployment tax, state unemployment tax. Okay, so how employees get paid. So we'll get practice calculating these different methods together. Basically, we can have someone who's salaried. We can have someone that gets paid per hour. We can have someone that's, salary plus commission. We can have somebody that's, a piece rate or are paid, per unit, for example. So there's a few different ways that we'll get practice calculating it, but salary, money paid to a person for managerial or administrative services, and usually it's a fixed amount. So you might have a salary of 50,000 per year, right? So generally it's a fixed amount. And just like it shows here, time period covered, generally a month or a year. Wages, and this is when we're per hour, right? Money paid for either skilled or unskilled labor. Again, where a salary, usually we say our salary is, again, 4,000 per month or 48,000 a year, right? Where wages, it's per hour, generally speaking. And so that's what it shows here. Time period covered is for hours or weeks. Companies also supplement employees' salaries or wages with other type of benefits, such as commissions, bonuses, cost of living adjustments, and profit sharing plans. We don't get too much into the accounting procedures for some of these things. That's intermediate accounting topic that we cover in intermediate accounting. But again, we're going to get practice calculating payroll nonetheless. All right, so calculating total earnings compensation is based on the amount of time worked. Accountant must have a record of the number of hours that each employee worked. Again, each employee has its own individual, time record, right? How many hours they worked, and has their own individual payroll account, essentially. And each individual employee adds up to the total. Each subsidiary, individual employee record adds up to the whole payroll control account, right? So when there are a few employees, the time book is used to calculate. When there are many employees, time clocks or other electronic timekeeping systems are used. So calculating wages, it's going to show us an example here. And again, we're going to get some practice with this together, but this says, Mark Anderson, who works for Green Sales Company, is paid $22.95 per hour. Company pays time and a half for hours worked in excess of 40 per week and double time for any work he does on Sundays and holidays. So time and a half means 1.5 times the normal rate, right? 1.5 times time and a half. So you get the same amount plus half, basically. So 1.5. So for example, if someone made $10 per hour times 1.5, time and a half would be 15 per hour is what they'd make for overtime, right? And then double time is 2 times the normal rate, 2x, 2 times the normal rate. My writing's not very good. Okay, so Mark has half-hour lunch break during an 8.5-hour workday and is not paid for the lunch break. Mark is not paid for minutes before 8 a.m. or after 4:30 p.m. unless the overtime hours have been authorized in advance. And so here's an example of the time card. When the employee clocked in, when the employee clocked out, and I'm assuming right between here, right between here would be like lunch break. And then when they clocked back in, and then when they clocked back out, and the number of regular hours, the number of overtime hours. So for these overtime hours on here, we're going to be getting paid time and a half. I forget if it said double time. I think it said double time on Sundays and holidays, but maybe Saturdays too. We'll see. Let's see. Let's go back. Oh, okay. So double time is on Sundays and holidays. So he didn't have any overtime. So for these, he's going to be getting paid time and a half. 1.5 times his normal rate is what we're going to see. Okay, so Mark Anderson's pay information. So regular rate of pay is $22.95. And so he gets time and a half for any hours in excess of 40. So then when he works over any hours over 40, he gets paid $34.43 per hour, right? Because his regular rate of pay is $22.95. We take $22.95 times 1.5. That means overtime pay is $34.43. Okay, so then if we've got regular hours, right? Regular hours, 40. So we take 40 times 22.95 an hour. That gives us 918. And then we have what? How many hours here? 2, 3, 6. We've got 6 hours total overtime. And they're breaking it down here. So they're taking, 2 times 34.43, 1 times 34, 3 times. So they're kind of breaking it down here for you. But altogether, this is 6 hours, right? So we could have done the calculation just 6 times 34.43. we would have gotten the same number, right? Basically 40 hours regular plus the 6 hours overtime. So we've got gross pay of 1124.58. Total hours 46, gross pay $1,124.58. Okay, so that's one way to calculate it. And actually, this first method is what I think makes more sense. That's which way I prefer to do it. What we're going to see here with the second method is that they're going to take, 46 times his regular pay, and then they're going to take 6 times the half. And so we'll see that on the second method. Again, I want to show you both ways because your book talks about both ways, but the first method is kind of how I always like to calculate it. Made sense to me. Anyway, here's the second method. So again, regular rate of pay is $22.95 per hour. And so anything, any hours in excess of 40, again, he gets time and a half. So he gets his regular $22.95 per hour plus half of that. So half of that is the $11.48. That's the difference. So if we go back here real quick to this 34.43, okay? So 34.43 minus 22.95, his regular pay, is 11.48, right? So that's that half of 22.95, 11.48. So then using this second method, we take his total hours times his regular pay. So 46 hours total times the regular pay of 22.95 per hour. And then we take the 6 hours overtime times 11.48 per hour, and we add it up that way. And it equals the same number, 112458, right? If we go back, 112458. So it equals the same number. It's just a different way to calculate it, right? Like there's more than one way to eat an Oreo. Okay. All right, so salaries, people that are paid salaries, again, usually it's a salary per month or a salary per year. But to calculate overtime in this case, we have to break it down per hour. So that's what it's going to tell us here. So employees who are paid a regular salary may be entitled to extra pay for overtime. So our example here, Madeline Juan receives a salary of $43.50 per month. She is entitled to overtime pay for all hours worked in excess of 40 during the week at time and a half, her regularly hourly rate. Remember, time and a half means 1.5 times her regular rate, right? And then she worked 44 hours. So she's going to have 40 hours at regular pay, 4 hours at time and a half. Yeah. So to figure this out, what we have to do is we have to break it down again per hour. So the first thing we want is we want the amount per year, what she makes per year. So 43,000 per month times 12 months, she makes 52,200 per year. There's 52 weeks in a year, so we take that 52,200 divided by 52. She makes $1,003.85 per week. And then we need to break that down per hour. So 1,385 divided by 40 hours. She makes $25.10 regular pay per hour. Okay, so 40 hours at $25.10 is this 1,385. And I just want to make sure here I got my calculator. 40 times 25.1. My calculator is actually showing 1004, but I wonder if I need to add decimals to it. That's weird. 25.1. Okay, and then overtime pay. You know, if we take the regular 25,010 times 1.5, our overtime pay is $37.65 per overtime. So then we take 4 hours overtime times 37.65, that's 150. Added together, gross earnings 1154.45. So we have to break it down per hour. So to do that, we break it down per week, and then we can break it down per hour. Okay. All right, so piece rate and commissions. Piece rate, I mentioned this earlier, are generally when workers are paid like per unit, like in a manufacturing setting. If workers might be paid like, you know, how many units they manufacture that day would be a piece rate system, right? So workers under a piece rate system are paid at the rate of so much per unit of production. And then commissions, certain salespersons are paid on a purely commission basis, but the more common arrangement is salary plus commission or bonus. So maybe you make, you know, X amount salary per week or per month, whatever, but then you get paid, you know, extra if you hit a certain sales target or sales goal. Okay, so we mentioned earlier at the beginning that gross pay minus deductions equals net pay, right? So we take our gross pay, which we looked at a couple examples of calculating that, minus deductions equals our net pay. So this just shows us some of the common deductions and some of these different things that we're going to get practice calculating. So federal income tax withholding, state income tax withholding, Fica taxes. Remember, Fica taxes include both Social Security and Medicare, union dues, medical insurance premiums, and medical expenses under flexible spending account or flexible spending plan, contributions to charitable organizations, repayment of personal loans from the company, savings through the company like a 401k plan, which are type, you know, retirement accounts, and then dependent care expenses under flexible spending plans. Sometimes there's limits that go along with that, but these are some of the common deductions. So if you think about gross pay, that's the total amount we earn, just like the last couple examples we looked at, the total amount we earn. Then we'd subtract deductions, and that would be our net pay, or this is also called take home pay. That's what we actually get to take home after taxes and other deductions. Okay, so federal income tax withholding, the amount of federal income tax that is withheld from an employee's check is based on a few different variables, like, for example, whether the person is married or single, how many withholding allowances the individual has, and then of course how much money the individual makes, right? The gross amount. And so just like it shows here, employers are required to withhold employees' taxes and then pay them to the US Treasury. Employees have to keep records of the names and addresses of persons employed. And then the withholding allowance. So when we get a job, and for those of you that have worked before, you've probably seen this form. I think it shows us an example on the next slide. But to get our withholding allowance, we use this form W-40 when we start working at a place. Everyone has to fill this out. And it's the amount of an employee's earnings that are exempt from income taxes. So, you know, if the more allowances we have, the less taxes they take out. So usually an allowance is like you have an allowance for yourself, you have an allowance if you're married, you have allowance for each dependent. So if you have a family of 4, then you might claim 4 allowances, right? And so the more your allowances are, the less taxes they take out. And as I mentioned, everybody fills out this form when they start as a new employee at a company. So each employee has to fill out the form the W-4 form. Here's an example of what that looks like. Again, in this case, the person's only claiming 1 allowance. I'm all for saving money. So, you know, I kind of always said, I just always claim 0. And if I claim 0, they take the most amount of taxes out, and then I get a bigger refund at the end of the year. It's a little bit like a forced savings account is how I look at it. But, you know, some people would rather have just less taxes taken out of their check and then get less back at the end of the year. But anyway, you see the example of one of these here. All right. And the tax break, now we've got, and I put this here, it's actually on page 293, 294 of your textbook. We've got at least a couple pages from this publication. So this publication 15 Circular E gives us guides and tax tables for how much federal income tax to withhold. So we'll get practice doing this together in class and looking these up. But basically you look at what is the gross wage range, taxable income range, right? And then we look at how many withholding allowances they have to determine how much federal income tax to withhold. So anyway, we'll get practice doing it together in class. I have copies for those of you that have your book, you know, electronic form of your book that we'll be able to look at in class together. So they're not too bad. And then I also have this saved as well on my in my files. So maybe we'll look at the actual circular instead of just a couple pages from it they give us in the book. But anyway, we'll get some practice with that. So completing the register. So once we have taxable wages calculated, we have taxes, and then the deductions are calculated, then we can determine net pay, what we actually have to pay the employee, right? And so then we can, from this payroll register, journalize the payroll entry. And so basically what we're going to end up doing here is we're going to calculate, or excuse me, we're going to debit salary and wage expense for the total amount, the gross wages. And then we're going to credit all of the payables. So we're going to credit, you know, FICA, Social Security payable, federal income tax payable, FICA, Medicare payable, union dues payable, you know, whatever. And then we'll also credit salary wages payable is how we'll end up doing this journal entry. But again, we'll get practice with that together. And then, as I mentioned earlier, you know, we keep an overall payroll record that's the payroll record for the entire organization, all the employees. But then also we have to maintain, and we do keep track of each employee's individual earning records as well. And again, each employee's individual earning record adds up to the total payroll for the company, right? The total amount of salary and wage expense for the company. All right, so the payroll register, we're going to get practice with it. I'm going to have it in Excel so that we can get practice in Excel. And again, if you've already watched the syllabus and ALNet intro recorded lecture I showed you that in ALNet. There's already some Excel files in ALNet available for you, but we'll get practice with them as well. But this register just summarizes all of the payroll data for the period. And we use this register to determine the amounts that we need to record the transaction for, record the payroll journal entry for. And just like it shows here, accountant records the total cost to the company for services of employees as debits to wage expense. And it could also be called salary and wage expense, right? That's another way that we've heard it in the past and that we've got practice with it in the past. All right. So here's an example of the payroll register. You know, again, in your book, it goes column by column and it tells you what each one of these columns mean. But this is the total hours worked. This is what they had earned before this pay period. So this was before, oh gosh, I'm not good at writing with this thing. Before current pay period. Right? And then this is what they earned this period for these hours. Well, and I guess plus overtime. Some of them are overtime. So both of these came from these hours. Regular and overtime. This was the total. And so we take beginning cumulative earnings plus the total for the week equals ending cumulative earnings. All right. And then based on our totals for the week and what we've earned so far, we calculate taxes. So taxable earnings for Social Security, for Medicare. And then here's our deductions now. All right, all the way to here. So federal income tax, state income tax, Social Security tax, Medicare tax, total deductions. And then that gives us our net amount. Okay, so if we take letter F, total earnings, F minus O, which are our total deductions, F minus O equals P. That's our net amount, right? So column F minus column O equals column P. Anyway, we'll get practice with it. Not too bad. Okay, here's an example of what that journal entry looks like. You know, in the past, when we've done these salary and wage expense entries, we've always, or for the most part, debited salary, wage expense, you know, credited cash. But again, we're kind of expanding on that now, and we're looking at what all makes up that salary and wage expense. And so we see here, we're going to debit. We've got, in this case, sales wage expense, office wage expense. That's fine. We're going to debit salary and wage expense for the total amount. That would be like the gross pay. And then we credit all of these things that we took money out of employees' checks for that we have to turn around and pay. So federal income tax payable, that'd be income tax we took from employees' paychecks. We got to turn around and pay that to U.S. Treasury. FICA Social Security, FICA Medicare, State income tax. It looks like our employees also contributed to United Way. We got to give that money to United Way, pay that. So that's a payable. This must have been an employee who owed us money. So we're crediting accounts receivable, and then we're crediting wages payable. So this is the net amount. Net pay. This is gross pay. These are the deductions. Net pay. And then when it comes payday, so you see we do this entry on October 11th, and then the next day when it's payday, then we debit wages payable and then credit cash for the entire amount, everybody that's getting paid. Okay, not too bad anyway. We'll get practice with it. Okay, sometimes companies will open a separate account for payroll. And so what they'll do is they'll have, kind of their main bank account that most transactions go in and out of. And then they'll have a kind of special or subsidiary bank account that's just for payroll. So if they process payroll every week, and let's say, the payroll is $40,000, then they would take $40,000 out of their main business account, main cash account at the bank, and they would deposit it into the payroll account. So as employees cash their check, the checks are cashed from the payroll account. And the reason why companies do that is because, again, using the example of 40,000, if they paid 40,000 in payroll, they want to see all of those checks clear and know that all of those employees got paid. Theoretically, especially nowadays, a lot of companies do direct deposit, after payday, then that, every week after payday, that payroll account should be back to zero. So basically we're just transferring over enough money from our main account to the payroll account to cover payroll, so that once everybody gets paid, it's at a zero balance again. And so it's kind of a control measure that way as well. So here's an example of a paycheck. In this case, and again, some of you may have had a job already that you've gotten a paycheck like this from. Some of you haven't. It's okay either way. But it's just showing us, total hours, overtime, regular pay. Remember, regular pay, let's see, how much is this person? Does it not? I guess it doesn't show us per hour how much they make, but we can figure it out pretty quickly. If regular pay, 918 divided by 40, yeah. So this is the 22.95 per hour, right? So regular pay is the 40 hours times 22.95 an hour. Overtime premium is for the time and a half. That gives us gross, right? So here's our gross. And then we subtract income tax. We subtract state income tax. We subtract Social Security. We subtract Medicare. This is the total subtracted to arrive at net pay, right? So just like we wrote before, gross minus deductions equals net, right? Gross pay minus deductions equals net pay. All right, and then this is showing you an example of an individual employee time record. You'll see that most of the columns are exactly the same that we used on the payroll register. So you see the column headers here. If you go back to the payroll register, they're pretty much set up exactly the same way, because again, all these individual employee records add together and compile together to make our payroll register, right? All right, so these are some of the practice exercises that we're going to do in class together. We've got my timer's about at 44 minutes. So I'm going to try to just do a couple, maybe this first exercise 7-1 now and get some practice showing you how we calculate these. So let me stop sharing this. Hi there, everybody. Okay. So now I want to get the Excel spreadsheet pulled up. Okay, so here's exercise 7-1, and we'll just do this and then we'll stop because we're about at 45 minutes right now. So we don't have too much more time. So we'll just do this and stop. So exercise 7-1, determine the gross pay for each employee listed below. So letter A, Clay Jones is paid time and a half for all hours over 40. He worked 45 hours during the week. His regular pay rate is 25 per hour. Okay, so he gets, and we'll set this up. He gets 40 times 25. And then he gets 5 times, basically 20. Oh, hot dog. Oh, dang it. 25 times 1.5, which is 37.50, right? And we could plug the numbers into Excel too, but we can do it this way. So 40 times 25. So this is $1,000 regular pay. And then again, 25, that's his regular pay times 1.5. Overtime pay is $37.50 per hour times 5, 187.5. So then his total pay, 1,000. Oh, hot dog. 1,000 plus 187.50. So 1187.50 would be his gross pay. Again, we could plug the numbers into here. And so regular, is that right? I feel like that's not right, but anyway, so regular equals 40 times, oh goodness, 40 times 25. And then overtime, OT, equals 5 times 25 times 1.5. Plug the numbers in that way. 187.50 equals the sum of these two. 1187.50, right? Okay. Letter B, Mary James worked 48 hours during the week. She is entitled to time and a half for all hours in excess of 40. Her regular pay is 20 per hour. Okay, so 40 times 20, that's going to be regular. And then 8 times 30. And again, I got that 30 because if you take 20 times 1.5, that's 30, right? Half of 20 is 10. So it'd be 20 plus 10, 30. Okay, so this is 800. This is, 240? So 1,040 is what it would be. And again, we can double check ourselves. I'll just copy this so I don't have to keep typing it again. But if regular is 25 or is 20 now instead of 25, And then again, we're basing OT on 20 now instead of 25. Oh, it was 8 hours though, not 5. I was like, oh, what happened? 8 hours overtime instead of 5,040. Okay, just a couple more here. Letter C, Lori Terry is paid a commission of 10% of her sales, which amounted to 23,650. So she had sales of 23,650 times 10% means her gross pay would be 2365. Hopefully we're all comfortable with that. Okay, letter D, this is one we're going to have to do some different calculations. So letter D, Nicole Smith's yearly salary is $95,500. During the week, she worked 46 hours and is titled to time and a half for all hours over 40,000. Okay, so just like we saw in the PowerPoint example, first we need to take 95,500. We need to divide by 52. 95,500 divided by 52 weeks. So that equals 1836.54 per week. Okay. And then we take that 1836.54 divided by 40 regular hours in a week. 1836.54 divided by 40. And she makes $45.91 per hour. Okay. So then now, once we have this per hour, we can calculate what time and a half is. So 45.91 times 1.5 time and a half. 45.91 times 1.5. So she makes $68.87 per hour for overtime. So this is regular pay. Oh, I spelled that wrong, but whatever. And this is overtime per hour. Okay. So if she worked 46 hours, then she's going to get 40 hours at her regular pay, 45.91. And then she's going to get 6 hours at her overtime, 68.87 per hour. So 40 times 45.91, 1836.40, or then also 68.87 times 6, 413.22. And then lastly, 1836.4 plus 413.22. 2249.62 is how we would calculate her gross pay. So a few more steps on that one because she's salaried. We got to break it down, but the calculations aren't difficult. Anyway, we will continue this when we meet together in class. Let's see here. I'm going to stop sharing my screen. Hi again, everybody. Hello, my daughter's sitting there in the background. Chloe, you want to say hi to everybody? Say hi.
Hi.
Okay, all right. All right, guys, I will see you back in class spring semester. Woohoo! Bye-bye.